All right, everyone, we're gonna go ahead and get started. Hopefully, you can hear me clearly. I already have this on record just in case you tuned in a little bit late tonight. Today is Sunday. What's today's date? I believe the 22nd, 2020. And again, this is the weekly market forecast. All right. If you've been tuned in the last couple of weeks, we've been talking about different strategies that you can implement, uh, you know, into your trading routine. And we've also been talking about you know jotting stuff down and recording information. All right, and using that information for your advantage. So what we're going to do is we're going to dive into. I'm gonna have to kind of go quickly because there's a lot of information that I want to cover in such a short period of time. All right. So what we're going to do is let's go ahead and start with let's do the AUDJPY. Let's just stay where we've been. All right. And we're on the daily. Okay. And what we can see is that, you know, price has pretty much been in this range here. Okay. It's been in this range. And go ahead and get my rectangle. We talked about getting your rectangle. Okay. And you're pretty much going to take the high and low, and that's pretty much going to be your playground, right? Okay. You know that if price reaches this level, then you're really looking at buyer's territory. Obviously, if price reaches this level, you're looking at seller's territory. Okay, that's just floors and ceilings, uh, basic support and resistance. Okay, and what we can see right now is that price is within another range of obviously our rectangle, right? And there's also kind of it's set a lower low, lower high, a lower low, and right now it appears that this could be some type of resistance, but we'll see. Okay, but we do know that price has been overall bullish. All right, so it looks like this trend has been broken, and we this could be going up or down. Again, we're in the middle of the trend. All right, so what we're going to do a little bit is I want to talk to you all about a strategy that I kind of came across. And I mean, everyone knows that. Again, I like support, resistance of floors and ceilings. I also like using the EMAs as well on the chart. The kind of map out. Really, those are just more support and resistance levels, right? And you know, the change that I made was, instead of me actually having the EMAs on my chart, basically what I did was I learned that I could add them to the MACD. Okay, so we have a 20 moving average. Again, we talked about this in the last one, and the 50 moving average, and then I have a signal line of the last 12 periods. Okay, so that's what I have my MACD set on. All right, and what I took the time out to do over the weekend, y'all, is actually back test this strategy, this MACD cross. All right, looking at every time one of these, basically the MACD line crossed the signal line, uh, the results and what happened. Again, I went back the whole entire year, and what I'm going to do is show it to you. Again, we're talking about just writing everything down. This is the AUD-JPY. All right, now this strategy that we're talking about right now that I back tested is, again, I back tested on the AUD-JPY, and this is a 2-hour or intraday strategy. Okay, so we could call it a swing trading strategy of the MACD cross with those levels that we just talked about. All right, and what I basically, I was able to gather a sample size of about 95 trades. Okay, 95 trades, and it had an outstanding win percentage of about 93%. All right, as you can see here, I highlighted the wins and the losses. Okay, wins and the losses. All right, and I also recorded the amount of maximum pips that was created off of the cross, okay, win or loss, and the amount of time it took from cross to cross, okay, and I also uh, jotted down the date and the time. All right, that's going to be very, very key. So, what the results from this strategy, what I learned was, okay, is that basically we're doing the right thing, but we have to uh basically, it seems as we should hold on to our trades a little bit longer. Let me explain. All right. So again, 95% win rate. All right. And for the whole entire year, this strategy, this cross created 12,036.2 pips. All right, I'm gonna repeat that. 12,036 pips was created off of this strategy. Okay, the average win was about 128 pips. All right, and the biggest loss that was created was actually 44 pips. All right, which is not that bad if you're using proper risk to reward. So again, I back tested the strategy. It seems I did it a couple times last week, and I also got a couple wins up off it. All right, so so yeah, so again, the average, just showing you the numbers. I'm not making this up. 12,000 pips and an average of 128 pips. Okay. So, but now we're going to talk about the average amount of time that it took for uh, from swing to swing, which the maximum profit may have been achieved before swing to swing, all right, or cross to cross. However, the average amount of time from cross to cross was about 30 30 bars. So this is a 2-hour chart. So we're talking about 3 days. Okay, about 3 days. So instead of looking at just get in and out, okay, it may be more beneficial to maybe trade at a lesser lot size, okay, but maybe hold on to these trades a little longer. And the other thing I wanted to jot down that I forgot was the best time or the average time that across or the best trading opportunities with the AUD-JPY with this strategy occurred at around right after midnight, basically. Actually, no. This is 12:40 noon. I'm sorry. Okay, 12:40 noon. So around 12:40, just afternoon is pretty much when um you're going to get the most alerts. I guess that's what that's an average time. Okay, so it's just cool to jot that down because you know, that really doesn't seem like a normal time that I would be looking to make a move. Okay, but numbers is numbers, and that's what it says. So that's just something interesting to jot down. Okay, and I actually took out the time to apply this strategy across multiple different pairs, and it still had a 90+% win rate. All right, so that's really awesome. So basically, with us knowing what we have going on here, all right, we drew out our highs and lows off of the daily, and we probably could really do this off the 4 hour, but mm, that's cool, right? But knowing what we know now, okay, I'm sorry, 2 hour. Knowing what we know now, we're going to let the statistics, okay, uh, which this is basically kind of, if the MACD is telling you the averages, all right, between or the difference between the 20 and the 50, in a way, is kind of also mapping out different trend changes. Okay, that's pretty much what's going on with this. All right, and it's just quite interesting to see. So, based on that information, it appears to be that we're looking to be bullish. All right, which does make sense because if we look at the structure here, all right, we see that it was forming this downward wedge, and price did break out the wedge. All right, we do see some resistance here, but again, based on what the numbers are telling us, all right, that it's best to be bullish right now. Okay, all right, bullish. And what I decided to do was, if it said that the average was 128 pips or whatever, I looked at where 100 pips would be. That's 100. Let's see what 128 would be, which is really funny because it's really at the top of the zone. That's quite interesting. Okay, I can't even make that up. So yeah, right now for AUD JPY, we're looking at being bullish. Uh, Now we started trading other currencies, other pairs with this same strategy, and same thing is going on with GBP CAD. All right, Great British Pound CAD. We're just taking a look at the daily. There's been a slow uptrend, but based on what we're seeing, it appears, go down to the 2 hour, it appears that we should remain bullish. And if you remember a couple nights ago, we decided to go off this strategy. And I was saying that price was at the top of this box. And based on history, we was getting a lot of rejection, right? From this area. But we was saying, let's go with the cross, right? Let's go with the cross. And at the time, I was in a couple different trades, and I had decided to get in this on demo. But I just want you to look at what happened. Okay, we let me move the green box over. Okay, this is where we were, right? At the bottom of that. Right there you go. All right, look how clean that is. All right, look how clean that is. So price was actually about right here. Let's go back. I'll take my word for it. When the cross happened, Cross was that says Friday. I want to say it was this cross. Yeah, Tuesday. Okay. So price was here. I drew the box. Okay. Well, we must have been like up in here. Yeah, we were up in here. Exactly where we were. Okay, yep. Tuesday, 10 p.m. It's cool how you can just go back in time like that. So Tuesday at 10 p.m., yes, we were here. And price went up immediately and then it came back down, but nothing very serious. It never broke this floor. So this is telling us, this cross appears to be telling us that we have support underneath us. Okay, and as you can see, it's almost at the full take profit that we set back then. Okay, all right, but we obviously, we're looking for more pips than that. We're gonna hold on to it. Each one of these had a average hold time of about 3 days. Okay, or about 3 days. So based on that information, we're looking to remain bullish until we get another cross. Okay. And obviously, again, as you can see, we broke out of this and we seem to be looking for our next level of resistance. Okay. All right. Our next level of resistance. This is AUD CAD. The AUD really respect this strategy. So, okay. Same thing. All right. We had a cross. All right. But it hasn't necessarily, I guess so. Since the cross, let's just use the calculator. Measure 2, which is about right there. Okay. About 30 pips so far. All right. About 30 pips so far. So, and the cross happened on Friday. Today is Monday. So, based on numbers, this trade could be valid for another day, maybe two. All right. And we're looking at the everyday AUD JPY. So those are the four that I'm looking at. Now, the one that I'm concerned about here is this GBP AUD. All right. Now, you may be thinking, okay, well, how can I know when these crosses are happening, right? And I also went over that. All you have to do is set an alert. Okay, I went to the alert tab, and instead of setting a price alert, you want to set an indicator alert. All right, so you'll set an indicator alert, and basically you'll say, choose your time frame. We're going to use the 2-hour time frame. We'll add the indicator. We'll go to the MACD. And remember our fast moving average. Our fast moving average was 20. Our slow moving average was 50. And our signal was 12. All right. And then you want this to alert you when the histogram, which is this, all right, these little red bars, all right, breaks 0, is over the value 0, which will also mean that these two lines have crossed. All right. So let's add let's add. All right. And what you want to do is you want to put alert me every time this occurs. Okay. every time this occurs. So that way you can go about your day, and when the alert goes off, then you know it's game time. And then you set the alert. All right. So that's what you want to do. Now, I'm going to go back just in case you just tuned in. We were talking about basically we're going over the weekly structure. All right. Looking at price structure. We were mapping out our zone that we're in. For an example, like we always do, we want to go get our rectangle. All right, we're looking for, let's just use this one. We're looking for our high and our low, which is, let's do it like that. Boom. Okay, that's what we're looking at there. And based on this, we just looking at the range. Okay, so we know that when we get to the top of our closer to our ceiling or resistance here, okay, based on that high that we marked off, that we're really more in seller's territory, right? Based on history, reading left, predicting right. But we're going to allow our strategy, which is this MACD cross, okay, to allow us to determine for that next confirmation, right? That next confirmation, really kind of the main confirmation. Why? Again, I back tested strategy a year. You don't have to go live with this. You could try it out on demo. It gave me a couple wins already. However, it had a 90+% win rate. Okay, what is the MACD cross? Just in case. So every time this blue line, which is the MACD line, which is the difference between the 20 and the 50, the last 20 to 50 candles, right? And our fast moving average, okay, which is the last 12 periods, these crosses, all right, it's going to give you an alert. This alert has been winning over a 90% win rate over the last 12 months, all right? The last 12 months. So based on the history, it's saying that the average time of a cross, which again, you don't have to get caught up in that part because we got our alert set. All right. You see all the wins. Okay. This one is on the AUD JPY. I started going through other crosses, and it's still been winning at a 90+%, the average amount of pips. Okay. The average amount of pips per win was 128. Oh, sorry. Was 128. The total amount of wins or pips this strategy has delivered was 12,036.2 for the year on this AUD JPY. All right. So it's something else that you could utilize. Again, my thing is I'm trying to bring as many different strategies, but this one has really been tested, okay? And I would say it has my stamp of approval, right? I'm gonna have other strategies that we're gonna back test, that you could implement, all right? But bars the time, all right? The average hold time was from cross to cross was about 30 ticks or 30 bars, all right, which is about 3 days, all right, 3 days. So again, it's like trade less, but hold on to your trades longer, all right, you know, based on this strategy. Again, this is an intraday kind of swing trading strategy, all right. We're going to have other strategies if you're more of a scalper, right? This is more of an intraday / swing trader. strategy because the average hold time is going to be about 3 days on that one. All right. Um, so yeah, so let's go back to the charts here. Just wanted to give you that recap. Now, as we can see that we're kind of in a transition right now because uh, we don't know what's going to happen. We could get another cross. All right, you see how the MACD and the signal line they're kind of pinching each other. We don't know if they're going to cross or we don't know if they're going to reject. That's why we have the alert. So, I would sit tight. Oh yeah, I'm sorry. And back to the strategy, I wanted to show you the loss too. The max loss was about 44 pips, but the average loss was only about 10 pips on this strategy. Okay? Because when the losses were coming in, all right, is normally when it swaps up, come down, but it doesn't really create enough momentum. Okay. So essentially you'll go in a profit a little bit and then you'll basically be taking a loss because the alert will go off. You get that alert that's saying get out and go back the other way. Then you're basically around kind of your entry level. So we're talking about an average loss of about 10, 15 pips. It did deliver a 130 pip loss one time. Uh, Throughout some of the pairs, it never gave a back-to-back loss. But on the CAD, it did go through like a couple streaks of losses where it would lose like 3 times. Again, nothing super major. All right. Way more high, way more ceiling or upside than the downside. Right. So so that's just some good information. I really do like this strategy again because I love using the EMAs. All right, but it's cool to be able to take those off your chart so that you can see the chart a little bit more clearly, right? And you're basically just using that as confluence, right? I'm trying to take stuff off my chart so that we don't have uh, conflicting views. All right. Another thing about this strategy is that occasionally you're going to go and get some real runners here. Okay. The average win was, I think it was 128 pips. All right. But obviously that means you'll have some. I only counted a win if it went at least 30 pips. Right. At least 30 pips. If it wasn't 30 pips, I said it was a loss. Okay. From 30 pips. So we have a 156, 135. All right. Um, we have a 220, a 294. We have a 391. And guys, I had the date right there. So you want to go back to these dates and these times, you can verify all this information for yourself. 391. Okay. You got a 410. All right. And we're talking about this was all just within the month of March. All right. This is ridiculous. I mean, 12,000 pips and we're in November. So that's over 1,000 pip average a month. Okay. If you could just be patient enough, sit on your hands. Obviously, you still want to look at market structure. Okay. I'm looking at a 199, 200, 267, 220, 246, 207, 100, 171. Okay. Now, you don't want to have high leverage or over leverage your account. Okay. Because here's the catch with this. Because, all right, in some of these worst case scenarios, you could have found yourself down, all right, about let's say 50 pips, maybe even 100 pips, Okay, but nothing too major. Actually, the biggest on this was biggest loss is 144, but it may have been more down than 144. So again, you could find yourself down occasionally, all right. But again, price based on history did come back down the other way, all right. So you need to factor in that you could be down, you could go down 100 pips, using this strategy. All right. So make sure that whatever lot size you're trading on, whether it's $1 per pip or if it's 20 cents per pip, that if you times that number by 50 or 100, okay, that you could sustain, and we're not supposed to be leveraging really more than 2.5% in a one trade in our account, right? So therefore, you have to use smaller lot sizes on this strategy. All right. And again, be expecting to, these aren't short term trades, right? Average bar time was, I'm sorry, the average bar time was 30. So that's, again, about 3 days. All right. 3 days and some change. So just factor all of that into the equation. All right. Factor that into the equation. So, again, I just ran that down to you on how to basically set yourself up with these alerts, from cross to cross, swing to swing. And again, we'll come back on Tuesday night for another update to find out, where we stand, where we are with it. All right. So appreciate everyone for logging on tonight. Again, this will be recorded. If you need it, just let me know. You can get the recording. I may upload it to the Pip Catcher Academy YouTube channel. All right, y'all. Have a good one.